Hey everybody, this is Jim at SP500chart.com. It's about 4:40 on December 5th, 2013. We're going to take a look at the S&P after I remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research. And please, make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. Let's take a look. Okay, we are looking at a 15-minute chart, and I want to point out an important line for us to look at right here is this level that is just a little bit below 1780. Call it, for practical purposes, let's call it 1778. This could end up being the neckline to a head and shoulders pattern. We talked about that yesterday. If this market does not find some support, some buying energy to get it up and up beyond this last high at 1813, on the next rally, whatever it may look like. If we start to come back down to this line and then take it out, that would be a head and shoulders top. Also, if we break that line tomorrow or on Monday of next week, that would still be a head and shoulders top. It would just have a very small right shoulder. So I would watch this line very carefully. Now, one thing we can do, even though we are not dealing with a confirmed pattern, and even though we could still rally up and be at 1825 in 5 days, okay? But if this line breaks, then we would be looking at a head and shoulders pattern with a target of about 1745, which, by the way, could be taking us down to our teal support line that has still been working for quite a while. We look at this line, it goes all the way back to November of 2013. What is striking to me is it appears that the S&P just really does not know what it wants to do. We get a rally, and then we get a sell-off, then we get a rally, then we get a sell-off, and it just looks very, just a little bit, if I can use the term spastic, it's what it looks like. You can see that this trend line that we have on the chart right here today was back tested twice. We stayed above it, but you know, it's sloping down. We can stay above this line for a while and still be in a market that is slumping and getting lower. When we draw these lines, a lot of times I'll say look at this line as the first line that this trend is ending, and usually that's the case. But we've gotten over it a couple times, yet we continue to not really rally up very strongly at all. I'm going to throw one more thing on this chart today. And I'm just going to add this one little line right here, which is almost parallel to this one. And again, if we get over this line, then maybe that would be setting up a move over 1800 again. But I'll be frank with you guys, the market just does not look like it's giving any real super clear indication of what it wants to do in the very short term. And but I would still watch this line at 1778 really, really closely, because if that gives, then I think we are probably due to giving up another 32 to 35 points or so as a minimum from the breaking of what now looks more and more like it could be a head and shoulders top possibility. So we've got to rally in a hurry during the next 2 or 3 sessions, or this market looks like it may be getting ready to turn over, which is disappointing because I really thought that there was a decent chance that we could get on up to this red resistance line in the mid, even the high mid 1800s. But you know, the more I see what we're seeing here lately, I'm a bit more prepared for this to be a neckline and for us to see some significant weakness upon breaking this line. So that's only 7 points underneath where we are right now. I would watch that going forward, and you know, but just the same, until that breaks, I would keep an open mind. If it breaks, then it looks like we're headed down to test this teal line right here, and that would be around 1745. And we still have pretty much the same potential bullish outcome, which is we rally and we get a good back test on this line. And if that back test is higher than our previous high back at the end of November, then we may be good to keep on going up a bit. So this is now resistance, I think, clearly. If we reach this line, we should not be getting over it. We should stay under this line. This line is support. If it breaks, then we look for 1745. I think that's about the long and short of it, as far as I can tell right now. You know, you may even look at this past 5 weeks, and you could make the case that we were in a rising wedge that has broken down. Okay? That does not preclude the possibility of a back test on this line, but it does show that there may have been a little bit more built-in bearishness to the S&P than what I was thinking initially when it looked to me as if we may be in a rising channel between this resistance line and this support line. So guys, let's watch 1778 and let's see what happens going forward. We'll finish this week out tomorrow, and then hopefully we'll be over this line tomorrow, and we'll have a little bit more time to think about it over the weekend. So hey, thanks for watching. Take care. Thank you for your support.